Good morning, traders. Good morning, traders. Today we want to discuss simple CCI indicator trading strategy that does wonders. Simple CCI indicator trading strategies that does wonders. All right. Do you use the CCI indicators? Do you use the commodity channel index indicator? Do you call yourself a CCI trader? All right, now today I have a good news for you, and we're going to look at a specific CCI trading strategy that does wonders. I want you to stay focused, and I want you to clean your slate, so to speak, so you may start afresh. All right? It's very simple, but it's very powerful. We want a CCI. Here I have CCI period 14. It's good. We are looking for the level of 200. Can you see that? 200. All right, in the zone of 200, somewhere near that zone. All right. See here how the CCI came quite close. So when we are talking about zone, I will say between 100 and let's call it 190 and 200. All right, between that zone. All right, 100. No. Let's call it in the zone of between 150 and 200. But the key point I want you to remember, in the zone of 200, that's the first thing I want you to understand. When the CCI reaches the zone of 200, which means between 150 and 200, but I will prefer it to go to the 200, near the 200, quite close to the 200. All right, you get it? And then the next level that I want you to watch for the CCI is the minus 200 level. So we have positive 200 level, and we have negative 200 level. This is here on my chart, negative 200. All right. Here we have positive 200. So we want the CCI to go in the zone of negative 200. So when we are talking about zone of negative 200, between minus 150 and minus 200. All right, that's negative zones. So those are the places we are watching on any time frame. Monthly chart, yearly chart, hourly time frame, 30-minute time frame. Now, if you see this on a monthly chart, it's very, very good for swing traders. Also for position traders, okay? So, first thing first that you need to understand is that when the CCI, okay, talking about the extreme levels for the CCI, we are talking about 200 and minus 200. This is about the extreme levels. When the CCI reaches those extreme levels in the zone of 200 or minus 200, all right, is telling us that it's a high chance that a trend may begin. All right, you know, when you are driving, all right, all right. So you go speed 1, 2, 3, and then you will go 5. What's going to happen? You're going to speed. You're going to have a constant move. That's going to be a speed on the motorway, yes or no? The same thing the CCI is doing sometimes, going 1, 2, 3, 4, 5, reach the 200 level. All right? But you start first, all right? So you go 1, 2, 3, 4, 5, okay, at the beginning of the motorway. And then you say, there will be a trend when I will be speeding on the motorway in London, 70 miles per hour. For many miles. The same thing the CCI is doing. The CCI go 1, 2, 3, 4, 5 to 200 level. Say that, guy, be careful. So if he reaches the positive 200 level, this is the strategy. We are expecting a trend, a bullish trend. Be careful, my friend. Be careful, all right? Be careful. But generally, a lot of people, when the CCI reaches the 200 level, they will just sell. But very often when we see the high speed, it's a momentum, is the rate of change, it's a momentum, all right? All right? So, it reaches the 200 zone, this is extreme level, it's a high speed move, it's likely to begin, which we will expect, okay, a bullish trend. When do we have a bullish trend? So as a swing trader, you have this information in place. All right, and then you are thinking that, okay, if we're going to have a bullish trend, the price must display high lows, high. It's very important, right? Higher lows, higher high. So we want resistance to be taken out. We want the price to break above the prior high. So on this chart here, you can see that the CCI reaches, okay, the 200 level when we were here. So I have my pink trend line here. Can you see? I'm going to change it now into red so you can see on my chart. So at that, oh, it's not very clear. Let's use blue because I want you to see that line. Can you see the blue now? The blue trend line here. All right, so the price is on the edge of that blue trend line. It's a resistance level. At the time when the CCI is in the 200 zone, positive 200 zone. So the first thing that's clicking into my mind is, say, well, there's a high time we may see, okay, a trend. But then from that point, ordinary CCI trader want to sell. So if CCI is overbought, you want to sell, you will implement what? A top-down trading method to sell. You don't just sell because the CCI reaches the 200 level. You use a top-down trading method to sell. So trader receive a clear-cut signal here to sell, and they sold it down. The price came down to this point. So the first reaction when the CCI reaches the 200 level, there will be sellers. You need to be aware of it. There will be sellers, but you don't want to forget the second information that the CCI is providing to you, which means there is a high chance that a trend will begin. All right, but then you are patient. You say, if there will be a trend, the price must break above the prior high. Here it is. After the pullback, you can sell if there is a sell signal, if you know how to implement a top-down trading method to sell using the overbought CCI, you can sell here like everybody else. But you do not forget that there is a high chance that a trend may begin. Then, now you are waiting for a break above the prior high. Here it is. Here, this one. See here? Breakable. All right. So if the CCI provides this information and you want to buy and hold, you want to see a pullback, and you want to check the fundamental and perform Google Asset tests. Do not violate the market triangle or the trading triangle, all right, and use a top-down trading method. So you sell it like this, you say, okay, there's a high chance that, okay, there will be a trend. The moving average 14 is also rising because we are using CCI 14 here. It pulled back to retest the edge of the moving average 14, which is the red line here. There will be bias here. This price breaks above this resistance. So in fact, it formed a double bottom chart pattern and then pull back on the edge of the moving average 14, forming a higher low. So because we're on a monthly chart, if you were on a daily chart, you will see that the price starts changing direction here. If you're on a weekly chart, you will see early that this monthly candle, the price start going up. So a double bottom chart pattern followed by a higher low is just a high probability trading setup. All right, price breaks above the knot of the double bottom chart pattern, pull back to retest the top of the knot on the edge of the moving at 14. CCI is indicating to us that, my friend, there's a high chance we may see a high speed price move. There's a high chance that we may see a trend. All right, we are not rushing. All right, we are following the price. So if there will be a trend, it will start displaying high, low, high, which it must take out this resistance here, the prior high here. Here it is, it did exactly that. So if you were buying here, at this point on the edge of the moving at 14, you know that the resistance is still here. You are not closing your eyes, hoping that it will break through it. You will take profit there. But the best strategy will be to look for opportunity to buy above this resistance here, because CCI is indicating to us that there will be a bullish trend because it's in a zone of 200. But we will wait for the price to start finding a support above that resistance. Okay? The opposite. But one more thing I want to say to you, okay? So, what I have said today is true because CCI has given us one information, but the opposite is also true. This is what sometimes a lot of traders miss. CCI in a zone of 200 is indicating to us there is possibility of a trend. But what will happen if the price did not break above that resistance here? It means that we are likely to see a move down. All right? So don't miss the opposite of everything that we are saying. So anytime, try to train your mind. Somebody says something, try to turn it upside down and see what the opposite will mean. All right. So we are saying that when the CCI reaches the 200 level, all right, and if it breaks above this high here, we are likely to see a trend, all right? But what will happen if it starts displaying lower lows, lower high instead? It means that it's likely to go down more. So this is what has happened here. You see, in this zone here, the CCI reaches the same zone of 200, all right? Can you see, in the zone of 200 here? So what we do, very important, just draw that line here, which is resistance. CCI is overbought, it's pointing to our resistance. Pointing to the same blue trail line with this one here. See here? We are here. So it's telling us that it's a high chart that we may see a trend. All right? We may see a bullish trend. This is the first meaning of CCI in extreme levels. All right? But now here it is. It went down a bit as it did here. But as he was trying to brace above it, he couldn't. What's going through your mind? It's going through your mind that now is the opposite. We must now focus on selling, which means whenever the CCI reaches overbought zone, we highlight that resistance. The level of, if it reaches the 200 level, we highlight that resistance. And you can just wait. If you are bullish, wait for it to break above it and start finding support, and you take it from there. All right? Don't assume that definitely there will be a trend. If it doesn't, and instead it did something like it did here, a high and a lower high, and break through the common center line, you see all this shadow on top of this candle on the edge of the moving on 14, price trying to go up to retest the edge of the moving on 14, where bearish traders place order to sell along the moving on 14. So the opposite is that if there is no trend, if there is no bullish trend, there will be a downtrend. Here it is. All right. But the first thing that should come into your mind, so you may start trading the CCI correctly. The CCI is overbought, it's pointing to a resistance level, and if it's in a zone of the 200, it's indicating to us there is a high chance that a trend may begin. All right. But if there is no trend, if there is no bullish trend, there will be a down move. Okay, here it is. The same thing has happened here again. In the zone came quite close, and here you draw the resistance, you highlight it. If it breaks above it and finds support, you are bullish. You will expect a trend, highly lovely trend on any time frame. If it fails, you are selling using the trend lines and the channel. Okay, the inverse, not the opposite, the inverse is also true when the CCI is in the zone of minus 200. All right? Whenever you see the CCI in the zone of minus 200, it's indicating to us the possibility of a downtrend. But remember, my friend, now we don't want this video to be too long. We'll come back to it in another video. It's indicating to us, okay, the possibility of a downtrend. All right? So we will highlight CCI is oversold, is pointing to its support level. So we must highlight that support level on our chart. The price level where the CCI becomes oversold, reaches the level of minus 200, we must highlight it. All right. Going to color it now into light green. That's the light green line here. Support level. Okay. See the tails? Support level. So we highlight that support level. So CCI in the extreme level of minus 200, in the zone of minus 200, is indicating to our possibility of a downtrend. All right. So the opposite is also true. If the price fails to break below this support level and to find a resistance below it, it will be the opposite. The price will go up instead. This is what has happened here. So we highlight this support level. We are bearish sellers. We say possibility of a downtrend. We want it to break below that support level and to retest that support level and to find a resistance on the edge of that support level and then start going down, forming lower lows, lower high. But look here, though the CCI is indicating to our possibility of a downtrend, there was none. In fact, the price has displayed a double bottom chart pattern here, indicating to us the inverse, the opposite is likely to be true. There will be a reversal. One more thing, my friend. When the CCI reaches the minus 200 level, telling us that there is a possibility, all right? This is very important, all right? If the CCI reaches the level, the minus 200 level, indicating to a possibility of a bearish trend, ask yourself, all right? have you already have the downtrend? If the answer is yes, you should prepare yourself for a reversal. Now let me say this again to you to help you out because it's so important. We are talking about simple CCI indicator trading strategy that does wonders. So you will, while we are discussing, we can turn it up and down, sideways. That's what we are doing here. So CCI reaches the minus 200 level, the first meaning the possibility of a downtrend. But look, we already have a downtrend. So there was a downtrend for many years. 2013 has been going down, going down, going down. Here CCI is too late informing us that there will be a downtrend. So if something is too late, we will expect the opposite. All right. So there was a downtrend already in place. Now CCI is telling us that there will be a downtrend. We will now believe the CCI here. We will expect a reversal. So we will not just buy straight away. We will wait for confirmation because we are not trading the CCI. We are trading the price. A lot of people will just buy here. Don't do that. Here we see a double bottom chart pattern in place. Price breaks above the NAT and retest the NAT. Okay. All right. So possibility of downtrend, draw the support level. All right. And if it breaks below that support level, final resistance, yes, you can sell using the declining channel, selling on the edge, taking valid signal and using a top-down trading method. Don't just sell. Use top-down trading method. If you are not using a top-down trading method, you can quote me on this. You are not trading like a pro. All right. So here it is. All right. So if, for instance, we see here it's in the zone of minus 200, but we already have a downtrend, we will not believe the CCI. We will expect a reversal. If, for instance, the CCI is in the zone of a positive 200, and we already have, okay, we already have the bullish trend, we will not believe the CCI. We will expect a reversal. So what usually happens, you can see here, the CCI went from the overbought. It went from the zone. This is what usually takes place. You see here, it went down from the zone of positive 200, all the way to the zone of minus 200. During that time, the price was going down. So the downtrend is already in place. This is how you're going to pick up reversal using the CCI in a zone of 200 or minus 200. If it goes from the positive 200, minus positive 200 to the negative 200, if during that time we have a trend and the CCI becomes is in the zone of minus 200, we will be thinking more about reversal, but we will not just buy or sell like crazy old-fashioned traders. We will use a top-down trading method, looking for a clear indication that there is evaporation, exhaustion of the prior trend, because there won't be a reversal if the prior trend is still in place. Check the fundamental, see whether the dust has settled before going live. Okay. If we see this again, here it is again, going from the negative 200 to positive 200. Ask yourself, have you already have a trend during that time? No. In that case, we will believe the CCI, expecting the price to break above that resistance. As always, you know, this strategy is very simple, it's powerful. As always, you learn something new. All right, I'm speaking now to new traders. You learn something new on YouTube. It's powerful. Don't just go, all right, with all your money that you have in your pocket, throw it at it, only to lose everything, and then say, "Oh, George, it's just useless system." Or the best approach, my friend, is to use a demo account, all right, test it, retest it, making sense. You will face different variations, all right. All right. Check out the 6 biggest trading mistakes at dayprotrader.com. The trader make a lot of trading mistakes. There are 6 biggest trading mistakes that we're talking about. So do not trade the first thing first. Do not trade the CCI itself. Trade the price. The CCI give you a warning. Let the price confirm it. If here it is telling that there will be a bullish trend, here the price confirm it. It's confirming it now. It's confirming now. We are in a rising channel. We wanted to display high, low, high. It give us the warning. Here it give us the warning, and the price give us the opposite confirmation. It's telling that there will be a downtrend. But here the price said, no, I'm the boss. The reverse is in place because we already have a downtrend. CCI, you are too late. Follow me, the price. All right. Here the CCI was in the zone of positive 200. All right. warning us that, a trend will be in place. We highlight our resistance level. We want to give priority to bullish signal above and priority to bearish signal below. As always, you apply this strategy, you want to be ready to buy, you want to be ready to sell. This is true on every time frame, on the daily chart, on the weekly chart, on any time frame. But you will notice one thing, my friend. If you see this on a monthly chart, it becomes truly powerful for swing trading and for position trading, as I'm showing you here, because it doesn't do it very often on the monthly chart. And with that information, you can now become, give priority to bullish signal or bearish signal or expecting a reversal. I recommend that they apply this strategy on the monthly chart. You can go from the monthly chart to your 5-minute time frame. You can go from the monthly chart to your hourly time frame. You can go from the monthly chart to your daily time frame. But as you can see, if we go to the daily chart, you will see that the price will be doing that very often. But in all conditions, here it is. One example here. The CCI reaches the 200 level right here, indicating that there will be a trend. Here it is, it breaks above that resistance. And now we see a higher low here. And then it went up. It's going up now. Okay, this is what we want to see. But you can combine the monthly chart with the daily chart and making a better decision. So the information is on the monthly chart that there is a possibility that we may see a trend. Now we go to the daily chart and we want, if there's a confirmation, there's alignment between the daily chart and the monthly chart, we will take advantage of it. If there is a disagreement between the monthly chart and the daily chart, we are cautious. All right? On any time frame, my friend, on any time frame, as always, use what we have learned today as a trading setup. Don't use it as a trading signal. This is the mistake that a lot of traders are making. They use it as a trading signal. It's not as a trading signal. Use it as a trading setup. The trading setup will generate a trading signal, and then we select another time frame to enter the trade. Very, very important. The setup. All right. First, spend more time on the setup. This is no signal. This is a setup that will generate a valid signal. So you see it. Here it is, the overbought zone. You highlight that resistance level. You are day trading, you are swing trading. You want it to break above and to find a support. So from this daily chart, you can go to your 5-minute time frame, to your 10-minute time frame. You are watching that resistance level. You break above it, find a support. Display high low, you take it up a bit. You are watching the resistance ahead. Am I helping you here? Okay, if you have any question or suggestion, put in the comment section. And in due course, I will be recording another video to answer your specific question. On a 50-minute time frame, here is one. 200 zone is telling us there will be a trend. If there is no trend, here it is. It didn't break above it. Well, common central line. Now we see that a trailer is broken like this. We can scalp trade using this strategy. It's coming out of a triangle. It gives us the warning. Now here it is coming out of a triangle. We will sell it inside. All right. The opposite is also true in a downtrend. When it highlights for us that there will be, see, we are now on the 50-minute time frame. The CCI reaches the minus 200 level, below it, even below it here, telling that there will be a downtrend. Okay, so we had that support level. Here it is. This is a tricky one for trading. You see, it went below it, tried to go. You see, it tried to come near. Okay. This level, come down one candlestick bar, but only to go back above it. You see here, it's a tricky one. All right, this is what we are talking about. So if you are on a lower time frame, be careful. Be careful. All right, and do not violate the market pattern. Okay, so if you draw a common set trend line like this, this is a bearish trend line on a 50-minute time frame. Okay, so what the price did here, it breaks above it, retests it, and ran away. So you see here, it came here, it touched it, come down one candlestick bar, but look, it's not going anywhere. So you want to make sure if you are doing this on a lower time frame, ask yourself, am I selling into a support level or am I buying into a resistance level? So combine the higher time frame and the lower time frame when you are doing this method on the lower time frame. I know there are scalpers out there, but what we have discussed today is valid on all time frame, but the best approach is to use it as a trading setup from a higher time frame. Find it first on any higher time frame and then switch to the lower time frame to take advantage of it. Okay. This is about a simple CCI indicator trading strategy that does wonders. To summarize this video, we want the CCI. When the CCI is in the zone of positive 200, is indicating to us there is a possibility of a bullish trend. If the price does not break above the current resistance level, we will expect a reversal. Another thing that I want to say to traders, if the CCI is in the zone of positive 200, but the price has already is already trending or has reached the top of a bullish trend, we will not believe the CCI indicator. We will expect a reversal. On the other hand, if the CCI is in the zone of negative 200, it's indicating to us a possibility of a downtrend. However, if the price has already been going down, if a downtrend is already in place, we will expect a reversal. We will draw a support level that the CCI is indicating to us when it reaches the level of negative 200, and we will expect the price to break below it, to retest it. If we find a resistance below that support level, then we will expect a downtrend to continue. Have any question or suggestion, put in the comment section, and in due course, I will be busy recording another video to answer your specific question. We are the CCI Pro traders, talking about a simple CCI indicator, trading strategy that does wonders. Happy trading to you all, and speak to you soon.